Connery. I'm the Director of Guidance. I'm glad that you could join us again this week. Now, like I said last week, this is the fun stuff, right? Your students are working on their essays and their applications and all that good stuff, and now it's time to figure out, how are you going to pay for all of this? So Linda Hutchins briefly went over financial aid last week. We're very fortunate to have somebody from the Massachusetts Education Finance Authority, Kevin Fudge, joining us this evening to share his expertise in the field of financial aid with you. Before we get started, I would just like to briefly share with you some information about scholarships here at Algonquin, okay? So what we do is we house all of our scholarships on Naviance. And so I just would like to show this to you briefly before I turn it over to Kevin, because we won't have another presentation before scholarships become available. So anytime you're looking for Naviance, you're going to just simply go to Algonquin Academics Guidance. We have our Naviance sign in here, or you might have it saved on your computer and you can directly go to it. I'm going to sign in as a student here. And so once again, all of this information is going to be housed under the College tab, which we were talking quite a bit about last week during our senior presentation. So we can come down here, and we're going to look, I'm like looking at it so close here. We're going to come under scholarships. Now, of course, there's a national scholarship search that your student can participate in. They can simply click on it. It's powered by Sally Mae. And they put in a bunch of different criteria, and it will help match them with some potential scholarships that they could consider applying for. Now, it's important to understand that these scholarships are national, so they're going to be a little bit more competitive than some of our local scholarships for students might be. But you certainly can have your student, go through this and try to identify some potential scholarships that they could apply for. Typically, how it works is the student will submit their application. If they require like an official transcript, they will need to come down and speak with our administrative assistant, Morgan Bridge, and potentially provide her with an envelope where to send the official transcript. We don't release official transcripts to students and parents, okay? But we will gladly forward those to any scholarship committee that you need us to send them to. Okay, so that's just briefly how you can go about a national search. What you're primarily going to focus on is going to be just the scholarship search. And this is where we house our local scholarships. And these are all of the different groups, whether it's the Algonquin Parent Teacher Organization or the Northborough Teachers, all of the area committees who support our students through scholarships. This is going to become available probably in early February. We'll be sending out information through Naviance, directing students. I'll do like a little screencast about how to locate the scholarships, the steps that they need to take. We'll send out reminders about the due dates for all of the scholarships. But this is primarily where our students will get the most scholarship dollars, is through the local organizations. So right now, because it's not live, we don't have any live right now, nothing's going to come up, but you can simply go in and you can search if you're looking for a particular scholarship, or you can just look at the list that's on there. And we probably have 50 or 60 organizations that support our students and annually give $90,000 to $100,000 in scholarship funds, okay? So this is going to be an important part of the process for your student. Of course, the first step should always be, putting their applications together, completing their applications, and submitting those applications. And then they can begin working on the scholarship search and some of those applications. So that's just brief on the scholarships. We will send out information through Naviance just to prompt everybody that the local scholarships are now available, along with directions on how to complete all of that. I think one of the most important things right now is having a discussion with your student, a realistic discussion with your student about finances. Last week, Linda talked a little bit, and Kevin may touch base on this, about, going to the college's financial aid pages, looking at the net price calculator, seeing what types of forms you need to complete, whether it's the FAFSA and the CSS profile, okay? So that's all the stuff that you can do to support your student while they're busy doing their classes, participating in clubs and athletics, writing their essay. You can support them through the financial aid process by doing the net price calculator, pulling all your forms together, identifying what your dates and deadlines are for the various schools for financial aid forms. All of that is important. And also taking a moment to have an honest conversation with them, because the reality is our kids don't really truly understand money. So it's our responsibility to sit down and have an honest conversation with them. And they don't realize, okay, great, you're going to go off to college. Don't forget about your sister and your brother, because they're going to be going as well. So we have to make sure that we're able to support all of our children through this process. So having that honest conversation, making sure that your student has balanced their list with reach, realistic, and safety schools, because sometimes those schools, those safety schools, actually end up providing some significant merit money, and actually sometimes can be more affordable than, say, the reach school. So making sure you've balanced that list. And also the state schools are also another great financial backup. So if finances are a concern and you want an opportunity to be able to look at all of those financial aid packages, make sure that you have one of the UMass schools on your list so that you're just prepared. And share with your student, we're just trying to provide opportunities so that we ultimately can make an informed decision come April when all of your financial aid packages come in. Okay? So, I would like to welcome Kevin Fudge from MIFA to talk more in depth with you about the financial aid process. All right. There you go. You want to start it up?
Yeah. Okay, good. Excellent. I'm just going to switch to slide sorter. Thank you. I do. Sorry. All right. Of course, I need glasses. I'm getting old. Don't let my boyish looks fool you. I'm pushing 50, so. All right, there we go. Excellent. Rock and roll. Okay. I like to walk and talk, which is why I have the wireless mic. And my last name really is Fudge. You can chuckle. It's okay. I don't take offense. It's my real last name. Somebody asked me, is that your stage name? I was like, no, it's my real last name. I realized they're making a sequel to Charlie and the Chocolate Factory, but I will not be in it. And I didn't even taste fudge until I was 21. Go figure. But you can imagine how elementary school was for me. It was torturous, I'm not going to lie. Many kids had fun at my expense, but it's okay. I emerged victorious on the other side, so all is well. A little bit about me. I've been in college and career readiness for about 21, 22 years. So I used to work at Holy Cross as an assistant director of admissions, so I read 1,500 applications every year, and I was also the liaison with the financial aid office, so very well versed in both the Fafsa and the profile, understanding how financial aid packages were constructed. So I left Holy Cross after about 4 years, and then for the past 17 years have been at a national nonprofit based in Boston. That's all about trying to reform higher education financing, really working on developing multiple pathways for students so that students don't feel pressure to just go to college and then figure the rest out, but that if we're helping young people kind of find their way, that we create robust paths for any sort of post-secondary education, whether that's career training, 2-year school, 4-year school, directly to work, and then work for a few years, and then go to college, take a gap year, etc. So, and also I am the parent of a sophomore and an 8th grader, so I understand kind of where you're at. So I have 2 boys. Kind of wish I had girls who were a little more responsible, more mature on average, I guess, so to speak. 2 boys still trying to work on cleaning your room, taking out the trash, going to bed before midnight. COVID just blew our bedtimes out of the water. You know, if you feel my pain, I feel yours as well, because we had a routine and then COVID happened and it all went out the door. But anyway, so I'm here tonight to talk to you about everything related to paying for school. how the application process works, how the financial packages are constructed, and then to build on what your fabulous school counselor told you, the director of guidance, really help you make informed decisions about what is the financial fit. Everybody in this room has a different definition of affordability, and as you're constructing and creating lists of schools, it's important to consider how finances fit into this, because nothing is worse than having a bunch of college acceptances and financial aid letters from schools that did not give you a significant enough discount in order to make it feasible for you to attend that institution. Okay, because this is an investment that you're about to make, and I like to say not just the student goes to school, the entire family goes to school, because it impacts the entire family. If you look at, just real quick, because I would consider myself a subject matter expert on student loan debt, back in 2005, the number of borrowers 60 and over was roughly 630,000. In 2015, the last year of measurable data, it was almost 3 million. So the fastest growing segment of people with student debt actually are older, not just because they had their own student loan debt that they're still continuing to pay off, but they're also borrowing in larger numbers for their students. Also, grandparents taking out private loans. And so it's really important to consider and make a sound choice. Think with your head, not with your heart. That's a common theme that I have throughout the evening. So as you're getting information from sources, make sure you're getting it from neutral third parties. So MIFA is a not-for-profit entity that was created in part by the state legislature back in 1982. And its whole reason for being is to help families understand how to pay, understand how to save, and understand everything related to college and how it all works together, okay? So don't just type in scholarships in Google and then click on the first link, all right? Make sure you're getting information from a reputable, neutral third party, even from the schools themselves. Some are less reputable than others, but the information that's available on the school's website or from not-for-profits that do this as a free service to the public. So like I said, tonight we're going to talk about types and sources of aid, the application process, how financial decisions are made, paying for colleges, and free resources, okay? Emphasis on the word free. You shouldn't have to pay anybody to complete your applications for you, and you shouldn't pay anybody to work on your child's college application. As somebody who used to read college applications, I can tell you that a polished college application or a polished college essay, one that looks too good to be true, usually is, and somebody that paid a consultant to help polish it, it doesn't work out in the student's favor. So that money is better well spent in other areas than the outfits that will say they get your kid into an Ivy League school, because they have no bearing. If you really want to get your kid into Ivy League school, donate $1 million, slap your name on a building. That's the way it works, okay? So, let's be honest. College is a business, and you need to make sound financial choices, okay? All right, so the way this works, I like to take questions as I go. I realize that we can't have a conversation in this cavernous auditorium, especially with my friends all the way in the back, but I will call on you eventually. So if you have questions, all I do ask is that you just tell me your name, ask a question, I'll answer it in the course of our discussion. If I get going and no one's raising their hand, I will actually call on you. And if you really want me to call on you, then you'll be fiddling with your phone and playing Wordle or Candy Crush, whatever the kids are playing these days, okay? Excellent. So when I say types and sources of aid, we already talked about one, which is scholarships. Give me another. If financial aid is the cake and these types are the ingredients, what is another ingredient in financial aid besides scholarships? Grants. Excellent. What's your name, ma'am? Linda. Excellent. Linda said grants. We have grants and scholarships, which, Linda, are the best type of financial aid. Why? Thank you, Linda. What's your name, sir? Terry. Yes. Grants and scholarships are the best kind of financial aid because you do not have to pay it back. It is free money. Okay? If you see a grant or scholarship in your financial aid package, excellent. What is another type of financial aid? Not Terry, not Linda, somebody else. Work study. Wow, A+. You must know somebody that works in a college, or you're just very well versed. Excellent. Both. Okay. What's your name? Joanne. Thank you. So we have work study. We have grants. We have scholarships. I'm looking for one more that I already said. Loans. Excellent. Now, a word about loans. They're not bad necessarily, okay? Loans aren't bad. What's bad is borrowing without understanding how much cumulative you're borrowing and borrowing without understanding what your repayment options are or a plan to repay it, okay? So I don't want to get it twisted. Loans by themselves are not bad. Lots of loans, $40,000, $50,000, $60,000 of loans for an undergraduate degree may be not in your best interest. So it can actually be to your students' favor to get loans because it actually helps them build credit history, and if they have a smaller amount that's manageable, it can actually give them a sense, I don't like using the term skin in the game, but a sense of purpose in school other than partying and having a good time, because let's face it, I mean, college is a blast. I had a blast. I'm sure you did too, those of you that went to college. And I almost actually unfortunately flunked out, but I didn't. Managed to successfully stay in. Made Dean's List too after my dad threatened to cut me off. But it is imperative that we understand that these are all tools at your disposal to help you pay for school, okay? So gift aid, they call it, for grants and scholarships, federal work study, which, as Joanne might tell you, work study, it's aid, but it's kind of a misnomer because you actually pay out of pocket before you arrive on campus. Then you can get a job, a work study job, that's part of your financial aid, and then you basically get reimbursed for money that you already spent. But it's like how when you see your bill, it'll be like a credit to your account, but the student actually has to take the initiative to go seek it out once they arrive on campus. So if we have sources of federal aid, think about it from, so we have the ingredients, but they're in different buckets. So we have the federal bucket, which you have your federal Pell Grant and your federal Stafford loans, and then a federal parent loan, okay? That's all in the federal bucket. Within the state bucket, you have your state grants, so that there's a mass grant, you have tuition waivers, you have like the John and Abigail Adams Award for MCAS proficiency, and then you also have the Massachusetts no interest loan. That's in the state bucket, okay? In the institutional bucket, so the college or university, several private college and universities that have significant endowments allocate some resources towards institutional aid, okay? They do not require a separate application. Just by virtue of being an applicant at that institution, you are eligible for whatever award, institutional awards the schools have, okay? There's also a bullet on there that talks about institutional loans. Very rarely do private colleges offer their own institutional loans. It's actually more, think about it in terms of financing, because you have a payment plan that allows you to take a certain portion of the balance and spread that out over a 9 or 10 month period. But institutional loans are mostly for, I would call them predatory, for-profit colleges. And I'm gonna do my best to remain neutral. I may run for office one day, so I'm not gonna get on a soapbox. But, yeah, question, Linda, yeah, sure. Hey, I went to college before the internet, okay? I get it. Yes, so Linda's question is, what specifically is work study? And for all definitions of these terms, you can go to studentaid.gov, which is the federal student aid's website, and it has all the definitions and information that you need. It's very good. It's text heavy, but it's very good. So it's not, I mean, I guess you could call it a loan, but it's look at it as like a placeholder. So like you have a certain amount that's in federal work study, and then the student has to go get the job on campus. So colleges are allocated federal work study funds that they then distribute to students who work on campus in the cafeteria, in the library, and wherever. So it's not, in other words, it's not awarded to the individual, but it's a credit on your account that the student then will take advantage of. So the question I get a lot is it more advantageous to the student to have a work study job or just a regular job off campus? And the only advantage I would say to the work study is that it's a job within campus and that they understand that you're a student first, so like it's flexible along with your academic schedule. So for example, if you had a job at the mall and you told your supervisor, hey, I'm not able to work those hours because I have finals coming up, the manager at the mall might be like, well, tough nuts because I need people, and so, you know, if you can work, you can work. If not, I'll just find somebody else. Whereas work study, it's designed to sort of, you know, work in concert with the student and their academic classes. Yes, you had a question? Correct. 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 Yeah, it's you get reimbursed for out-of-pocket money that you already spent. So as we go forward and we look at how financial aid awards are constructed, that's why it can be somewhat misleading, because it can look like that's money that you don't actually bring to the table when in fact you do. So that's what I'm going to help you interpret when you look at your award letter, how that all plays out. Thank you for the question. All right, and then other agencies, that last bucket is other agencies, and as Lisa mentioned, scholarships. So I always recommend you start locally before you expand your search outward. So obviously there's scholarships you can apply to nationally, like there's national corporations, but you're gonna have your greatest success when you look at scholarships within your school's portal for students specific to this school. All right. So, student loans. Student loans, emphasis on the word student. These are for students. Parents do not have to do anything related to these loans, okay? The only thing that parents have to do in order for a student to obtain a loan is to provide a digital signature on the free application for federal student aid, which I'll talk about in a second, okay? So these are in the student's name and the student's responsibility. Now, keep in mind, the student loans have limits for each year. So the first year, it's $5,500. The second year, it's $6,500. The third and fourth year, it's $7,500. So if your student takes the maximum loans available to them each year, they will leave school with $27,000 of student loan debt. And that translates into a monthly payment of, I think, $281.77. Let's round up to $300 a month, okay? And if your student does nothing, they will automatically be placed in a standard repayment plan that will be finished in 10 years if they pay every month on time, because 120 qualifying payments, 10 years, you're done. There's no prepayment penalty, so if a student wants to be aggressive in repaying their loans, they can. So it's not like they have to wait 10 years to pay it back. They can pay it back in 5 if they choose to. Also, as you may have heard, there are different repayment options. So depending on what type of job, or if your student has a job at all after leaving school, there are flexible repayment options that can work in concert with whatever their salary is. So like they are income-driven plans, and so it's pay-as-you-earn, revised pay-as-you-earn. I won't get into all the details, but you have options other than a standard repayment plan to satisfy the student loan debt. Now, you'll notice the interest rate. It is fixed every July 1st. So right now, for students who are enrolled in the 2022-2023 academic year, it is 4.99%. In my experience, over the last 15 years, I've seen it as low as 3.4% or as high as 5.1%. But this is probably at the high end of interest rate you'll see for a student loan. And the thing is, it's fixed each academic year. So any student who took out a loan for this year, that 4.99% is going to be the interest rate for the life of the loan, unless they consolidate, which is another topic which we can talk about offline. If you have questions about that, I'll give you my email address at the end, and I can explain how that works. But for your purposes, each year when they take out a loan, it will be the same interest rate, okay? And as we continue this conversation, understand that financial aid is a year-to-year proposition. You don't just fill out your financial aid applications once and then look aside until the student leaves. The interesting part about this and how loans tend to accumulate is you only need to sign a master promissory note for your loans one time, okay? That's what can be problematic, because then you get a loan the next year, you actually don't sign for it, so you don't look and see what you're borrowing, and that's how things can accumulate before understanding what your total amount borrowed is, okay? Those can be a little bit different depending on the status of the student. So if the student is an independent student, meaning they're 23, they're under legal guardianship, then the student's loan limits would be $4,000 higher for freshman and sophomore year, and then $5,000 higher junior and senior year. But the majority of students that are dependent are going to have that as their loan limits. Yes, a couple questions. Excellent. What's your name, ma'am? Sophia, pleasure. Yes, Sophia's questions is, are all students eligible for a Stafford loan? That is correct. So if you make $10 million, you are eligible for a Stafford loan. If you make $1, you're eligible for a Stafford loan. The key difference is if your loan is, if you have high need, meaning you're eligible for a Pell Grant, then you can have a subsidized Stafford loan, meaning the government is responsible for the interest while your student is enrolled. If you have $10 million, you would get an unsubsidized loan, meaning you are responsible for the interest while the student is enrolled in college. Okay? All right. Excellent. Yes?
I think you kind of insinuated it. I wanted to know, when does that repayment clock start?
Okay. What's your name, sir? David. So David wanted to know, when does the repayment clock start? So for students that are enrolled, the repayment doesn't begin until 6 months after they separate. Notice how I didn't say graduate, but if they withdraw and they don't complete college, it's 6 months after, which is called your grace period, okay? So for students that graduate in May, their first payment will be due in November. Interest accrues at disbursement for both subsidized and unsubsidized loans, just that the government will be responsible for the subsidized loan as the student makes their way through school, and you will be responsible for the unsubsidized portion as the student makes through. You don't have to pay the interest, but many families do, just as one, to obviously limit what they will then eventually repay at the end of college, but also as a lesson to the student, so to make them aware that, hey, this is out there, and eventually you're gonna have to repay. So I've worked with several families on constructing, like, not just the payment plan, the monthly payment plans that the schools offer, but what percentage of, is it reasonable to expect the student to pay of the interest while they're enrolled if they do have a unsubsidized loan? Thanks, David. Great question. All right, so name check. David, Sophia, Joanne, Linda, Terry.
Oh my goodness.
Excellent. We're on track. Yes. You forgot your name. My name is Madhu. Madhu. Pleasure. Correct. Okay, so Madhu's question is will the interest be compounded? And the answer to that is, it depends. So when people have been in repayment and have fallen off repayment, and then it's delinquent and then default, at that point, it is capitalized and added to the principal. So it's almost a negative consequence of not repaying. When you are right out of college, then it is not compounded and capitalized. It is just treated as, this is your loan, and here's your interest, and now this is the amount that you owe, and you will start to pay that back. And so it's important, one of the challenges that's made this mess of loans that we're in right now is because several unscrupulous loan servicers were not applying payments appropriately, and so they would leave off $1 of principal and say, well, you didn't meet the full amount required to make that a qualifying payment in order to have your loans forgiven if they were doing like public service loan forgiveness. So the reason why I say it depends is because the government, as part of their ongoing modification of student loans, is looking at how interest is applied, not just in the beginning, but like during students' monthly payments, and if there's a way for the government, as they're looking for reducing people's balances, to do something about interest. So that's why I say stay tuned. And I will just say this real briefly too. This is one issue. I know that there's some challenges within our political system, but regardless of whoever occupies the Oval Office or whoever's in the majority minority, this is something that politicians of all stripes can agree on, kind of like puppies and apple pie. So the question is, yes, this is challenging. The issue is just how do we best address it? And so, it's a constant evolution with this. I will say that there have been lots of improvements. The challenge is communicating them to the public and also requiring people to opt in. When you require people to opt into something, you don't see people do it in large numbers. You almost have to make it like mandatory. Here's what we're doing across the board, and then just go ahead and do it, and then help people make sense of it. But again, that's a whole nother conversation. Happy to talk with you more about that offline. This portion is very important because a lot of people think about, when we think about merit-based aid, this is the most desirable aid because you have some control over this, right? When we think about merit-based aid, it is based off of, the most common way to show merit is through academic prowess. So what is your grade point average? What is your class rank? What did you get on your SATs? Do you take a certain amount of AP classes? If the school offers an international baccalaureate program, are you doing that, right? So academic merit is the tried and true method by which you can demonstrate your capabilities, and a school can reward you of that merit through merit-based aid. The key thing to remember about this is that it's not just academic, it can be athletic, artistic, okay, that's how you can demonstrate merit as well, but it's not uniformly offered across the board. Most merit-based aid is going to be at private institutions, and it can fluctuate based on the amount by the school. And it's important to remember that if you have a merit-based award in your financial aid package, it can be, let's say you have a $20,000 award in your financial aid package, a merit-based award. That $20,000 is either $5,000 or it's $80,000. Why? Because it could be $5,000 if it's a $20,000 award split up over 4 years. So you take $5,000 your freshman year, $5,000 sophomore, $5,000 junior, $5,000 senior. Or it could be $20,000 times 4, which is $80,000, because you can have $20,000 a year. It's very important to understand and be clear how that merit award is constructed and what are the requirements in order to keep it year to year. I used to do direct service and help and work with families individually on this process, and I can tell you part of some of the most awkward conversations were when a family was coming in with the student to look at their award, and it was a returning student. And they had the bill like in August, and they were like, "Oh, little Johnny, looks like we need $20,000 more. Can you help us find it?" And then I'd be talking to little Johnny, and the parent would be like, "Wait, I thought you already had a merit-based award." And little Johnny was like, "Well, that was GPA dependent." And the mom's like, "Didn't you get the required GPA?" And he's like, "Well, about that. They had a sale in Milwaukee's Best, and we had this party, and sorry." So your award can go away, in other words. So most merit-based awards, if it's based off a GPA, is going to be like 3.0, 3.25, maybe 3.5 tops. I've rarely seen an award that says, in order to maintain this, you need a 3.75 GPA, okay? It's going to be like 3, 3.2, 3.5, right? But it is important to note that if the student does not meet the requirements, that award will go away. And there's no like, can you give us a second chance? It is what it is, right? Sometimes there may be a separate application, but it's very rare. And then if they do ask for a separate application, it would be due prior to the end of the calendar year. So double check with the colleges where your students are looking at, and you can have a conversation with the financial aid office about what their policies are about merit-based aid. Now, most people, when most aid, as it is constructed, is need-based aid. And let me tell you right now, what your definition of need is very different than what the federal government's definition of need is, and more importantly, what certain private colleges' definition of your need is, okay? If you own your own home, I'm just gonna skip ahead a little bit, a few slides. If you own your own home and you're applying to a private college that requires the CSS profile, that private college is going to look at the home value and think that you should use your home as an ATM. Because they're gonna be like, well, it's the family's responsibility to pay. I'm just giving it to you straight. If it were me, I don't know that I would do that. I don't think that that's advisable, and I think that's sort of, I don't want to say a cop-out by the schools. I understand what their philosophy is, but unfortunately, cost of living doesn't apply equally, and so if somebody is applying from Nebraska and their home value is X and it's like 5,000 more square feet than yours, they're not gonna, it's kind of, there's not really apples comparison. And also I would just add that schools many private schools employ analytics teams as they're constructing their award, because they're trying to figure out how much will it take for you to actually entice you to come. In other words, how much of a discount can they give you? And then you'll take the bait and you'll dive in. So your job is not to, your job is to be able to say, okay, that's a great award, but be willing to walk if it doesn't fall within the requirements that you need in order to make it be affordable. But I'll talk more about that later in a second. But basically, the government's definition of need is based on 3 variables in the financial aid application. Your adjusted gross income, the number of people in your household, and then the number of people in your household that'll be going to college in the upcoming academic year. So there's other variables that are involved in the equation, but those are the 3 dominant variables. And when a school tells you, we're gonna meet 100% of your demonstrated need, what they're saying is, we're gonna do our best to meet as much need as you have as determined by the federal government. So it sounds great on paper, like, yes, we need 100% of your demonstrate. You're like, oh, my prayer's been answered, awesome. Or when like Harvard says, oh, well, if your family makes less than $300,000 a year, you can come for free. But what they don't tell you is like they have a 2% acceptance rate. So, I mean, you know, great, that's awesome, but how many people are actually taking advantage of that? But it's important to go through the process because you're not gonna be eligible for any type of aid should you not do this. So there's lots of people who come up to me after these presentations or just on the street because they know what I do. And they're like, Kevin, why do I even bother? Why should I even bother? I'm not gonna get anything. I make X, you know, what's the point? And I say, go through the process because you don't know what type of discount you may end up getting. And I would also say, if you're looking, and it's important that everybody includes state universities and colleges on their lists as points of comparison, it may be true that a private college can give you a significant enough discount that it would cost less than what it would cost to go to a state university. If that's the case, then that's wonderful. So it's important to have comparisons to evaluate which one is the best. And just a quick word on that, there's a difference between early decision and early action. Early decision is binding, meaning you have to withdraw other college applications and you're not able to look at potential awards from other schools, and it's binding, meaning that if you get accepted, you agree to attend whatever the school offers you in financial aid. Early action allows you to find out and have an admissions decision before the end of the calendar year, but the benefit of early action is that it lets you not make a final decision on where to matriculate until May 1st. And the benefit of that is you get to review all the other college applications, admissions, and financial aid decisions. And I always say, like, have more choices that help you make more sound choices. So just a word to the wise on that. The important thing to remember about these financial aid applications is that they are timeline sensitive, okay? Please do not file these late. Do not submit applications late. There are things like MIFA's College Application Manager to help you stay organized. So I'm not a technological dinosaur or a technophobe. I did go to college before the internet. I mean, I tell kids that, they're like, what? How'd you write papers without Wikipedia? I'm like, really? I went to the library, used microfiche, you know? Try it sometime, it actually works. But it's important to have documentation of things. So get comfortable in the middle of folders, print things out. If you do end up having conversations with financial aid offices, having your documentation, your income information handy, award letters from other schools as points of comparison are always helpful in facilitating conversations instead of like scrolling through your phone to try and find an email. It doesn't matter how technologically advanced we get as a society, it's always important to have documentation. And then each college is going to have a different deadline as to when their financial aid is due. Typically, it's going to be February 1st, February 15th, March 1st, or March 15th. I've talked about this a little bit, the Fafsa. It is the free application for federal student aid. Emphasis on the word free. You do not have to pay anybody to help you complete this, all right? It's available as soon as October 1st, and it's fafsa.gov. What you can do is you log in with an FSA, so federalstudentaid.ed.gov ID, and basically that's your digital signature. Both the student and the parent need a digital signature. If you have multiple children, you as the parent only need one. Your digital signature applies for all your children. but all your children need to have their own FSA ID. Okay? You can have, as a parent, an FSA ID that applies to all your children, but your children have to have their own FSA ID. Okay? And again, you have to complete this every year. And if you have multiple children, you complete it for each individual child every year. Yes. First, my friend right there. What's your name? Brian. Brian, what's up?
So if you're applying early decision or early action, does the FAFSA also have to be in by that date, or can I come later?
So Brian's question is, if you're applying early, does the FAFSA have to also be in early? The answer is, you have to look at the school's policy and when their deadlines is. Some schools say yes. Some schools say you can wait till the general one because you have until May 1st to make a deposit. So thanks, Brian. And Joanne. Your FSA ID, you log in to if you don't have one, you get one. So at that website right there, fsaid.ed.gov, that's where you can sign up to get one. Excellent question. Yes? Hannah, pleasure. So Hannah's question is, if you're not the student's parent and you're helping the student, do you need an FSA ID as well? And the answer is no. You can help the student, but when it comes time to actually sign the application, the student's parent has to provide the signature. If the student, and that's a really great question. If the student is independent, then they're only going to require the student's income information, and there is no parent signature required. But that's only if the student is considered independent, okay? If the student is not a citizen, or the parent is not a citizen, you can put zeros as placeholders for a social security number. In that case, however, the student without a social or the parent without a social that's not documented will not be able to get an FSA ID. In that case, the family would print out the application, sign it manually, and then mail it to the processing center. The address is actually on the financial aid application when you print it out. Okay? What else is on the FAFSA is the colleges. Oh, question, yes. Paul. Oh, Paul. Paul's question is, what do I mean by independent student? So for financial aid purposes, a student is either dependent or independent. So if a student parents are deceased, or if the student was ever in state custody, or if the student is 23 and older, or if the student is married and has a child, they are independent. In all other cases, the student is dependent. Excellent. So what you put on the FAFSA, the interesting thing is you have to put in all the schools where the student is applying, and each school has a 6-digit school code that you can look up while you're in the application. Okay, you don't have to memorize all the school codes. I did once. It was hard. Got kind of fun. But you put them in, and then the information gets sent to the schools automatically. But this is my time to suggest that if your student is applying to more than 10 schools, you may want to help them reevaluate that, because it just makes doing this more complicated, because then you have to submit it, wait for it to be processed, then delete schools and add schools. So also, I don't know. I mean, back in my day, when horses and buggies and when I did my papers by kerosene lamps, I applied to like 6 schools, like 2 safety, 2 likely, and 2 reach. Maybe you want to apply to 8, maybe you want to apply to 10, but in my professional opinion, there is no reason to apply to more than 10 schools. Some people may argue, well, if you apply to 18 schools, well then you increase your chances of getting a good financial aid package, because then you're going to have a greater variance. And no. Statistically speaking, your awards are not going to vary that wildly that applying to more schools is going to give you more options. You can only go to 1 school. So do your homework and whittle it down before you actually apply. So when you do apply, you're doing it in a very targeted manner. You're not just throwing darts at the chalkboard, hoping something lands. Do your homework before, and then you do your financial aid. The parent information that has to be reported on the FAFSA. So the one, I would say, good thing about the FAFSA being a living document is that it has evolved to include all types of families. So if your family is, your parents are married, and including same-sex, both parents' information is on the FAFSA. If the parents are divorced, but for economic reasons, or because maybe they're still in love, they still live together, both parents have to be on the application, on the FAFSA. If there's a divorce and there's the parents do not live together, then only one parent is required to provide their income information and put it in the FAFSA. Now, the question I get all the time, and I'm sure tonight will be no different, is, Kevin, what happens if there's a divorce and there's joint custody? Which parent's information goes on the FAFSA? Does anybody want to guess? $50 gift certificate? Who makes the least amount of money? Right here in the front. Step right up and claim your prize. Excellent. Whichever parent makes the least amount of money. And there's no auditors hiding in bushes to see if you're actually telling the truth, or to see if like the child is actually spending more nights at your house than the others. I would also add, and I had this conversation this morning, it's helpful, not required, but it is helpful in cases of divorce that the custodial parent who is putting his or her information on the FAFSA is the parent who is claiming the student on the tax return. It's not a requirement, okay? Because I know I've talked to enough folks, and they'll trade off who claims a child one year versus the next, or if there's multiple children, then they'll switch off who claims who. But it can just be helpful in supporting the narrative that you are the custodial parent, and then keeping all the numbers in play. But like I said, the main variables, it's number of people in the household, number of people in college, and then income information. And when we say income information that's on the okay, yeah, sure. What's your name, sir? Thomas. Excellent question. So Thomas's question, if the parents are not in this country and he is a legal guardian, does he sign the FAFSA? No. Legal guardians do not sign the FAFSA. And if the parents are alive and not deceased, even if they're living in another country, then they are still required to put their income information. If they're divorced and don't live together, then only one parent would put their information on. And one is a citizen and one is not. The citizenship isn't the issue. It's just whoever claims to be the custodial parent. Thanks for that question. Yes? Shahara, pleasure. No, Shahara, that's news to me. So the general rule is the more kids you have in college, the higher your need is. So as I'll talk about in a second, when you finish the FAFSA, it calculates your EFC, your expected family contribution. So just ballpark numbers, and again, these are just numbers for conversation's sake. Your household income is $100,000. You have 4 people in your household and 1 person in college. Your EFC is $10,000. That same house, and if you take those same numbers but then have 2 people in college, then your EFC would be like $7,000. Again, rough numbers, but basically the more kids you have in college, the higher your need would be, and the lower your expected amount to contribute to both children's education would be. So income is the primary driver. So if your income goes up, even if you have multiple kids in school, that is the primary driver of how the formula works. But ultimately, how the variables all work together, it's the income, household size, number of people in college for that upcoming academic year. Happy to talk to you more about it offline. I'll give you, again, I'll put my email address at the end, and I can answer your specific question. Yes? Yes, so the question is, I have a student who's in college. I did up the financial aid application the first year, and then in subsequent years I didn't do it because I was not successful. And now I'm going to have another child in school, so I'll have a 4th-year student and a 1st-year student, and should I fill it out again? And there's no penalty for skipping years. So if you want to fill it out, it's on you. But they're not going to be like, oh, now you're definitely not going to get anything because you like ignored us for 2 years. No, it's a year-to-year proposition. However, if you're in, you're in. If you're out, you're out. No harm done. Yes.
I had a follow-up question to scenario with the 100,000
Yep.
and you were expecting an extra 10,000 and now you have 2 kids.
Yep.
7,000 per kid.
No, it's 7,000. Well, it's 7,000 for the family. So it would be like, as it comes out, each kid, it would probably be like maybe 3,500 or 5,000. Like it wouldn't be, your expected family contribution would be lower, and it would be lower for each kid. Do you know what I mean? So the total amount would be less than $10,000. Each kid, you're right. You're looking at me puzzled. Let me back up. Each kid is going to have their own EFC. But combined, it would be less than if only one was in school. Because each kid's application is going to be 4 people in the household, 2 people in college. They're going to each say that 2 people in college. So in theory, yes. So I guess what you're saying is, am I going to pay more? Is my EFC going to be greater than 10,000 combined? And it could be. But the individuals would be less. You have another kid going to college, you're going to be paying more anyway. But the point is, they're not going to ask you to pay at the level you would pay if you only had one kid in school. Does that make sense? Okay. This is complicated. I get it. I get confused myself sometimes, and I'm an expert. But yes. Yeah. Just talk to me offline. Happy to answer those questions. Thanks, Thomas. Yes. Sure. So the question was about timing on financial aid. So basically, you can do this as soon as next week. And the only way you'll get you can submit a financial aid application and put 10 schools on it that you think your student might apply to. And if they don't end up applying to the school, nothing happens. Because the only way you get a financial aid award is if you apply to a college, you get accepted, and then the college has their income information on file from the Fafsa. You should have a general idea, but it doesn't. I would just do this first, and be done with it, and not say, well, let's wait until we figure out where we're applying. I mean, you can. There's no harm. Exactly. You can always add. The thing about the Fafsa that's great is that you can always add more to it because it's a document that you can edit. Okay. The CSS profile, once you submit, it's gone. So that for which I'll talk about in a second, you need to be certain of what schools you're going to be adding to that. Yes. Brad, what's up? Thanks for remembering. So Brad's question is, as investments, and we're going to move on in a second because I don't want to get too bogged down, but are investment properties included, how much weight is given to it? So if we look at what parent-student assets, basically for your purposes, think about it, what is liquid? What's in the bank? What have my checking account? Other property that, and I talked to somebody the other day who was like, well, all we have is land. We don't actually build anything. There are protections, it sounds strange, but there are protections in the formula that don't, I don't want to say penalize because that's too strong a word, but there is an asset protection allowance that's built into the formula, so that operates in the federal methodology in a way that does not operate in the institutional methodology. So if you're applying to private schools and you have additional property, then you can expect a minimal discount unless there is other sort of merit, like academic, artistic. Correct. The CSS cares way more about the assets. The FAFSA is mostly all about liquidity. So you can include if the student has a 529 plan, you include it as a parent asset, not as a student asset. okay? Because again, there is an asset protection allowance for parents that's not either on the profile or for students. You don't have to include the value of your home. Remember how I said earlier you have to, on one financial aid application, for private schools, you do? But for the Fafsa, you don't include the value of your primary home. You don't include anything in retirement. So like 401k, IRA, you don't do that, life insurance, or the value of a small family business as defined as a business with less than 100 employees, okay? So if you have an additional property that is rented out or whatever, you just list it, but you don't necessarily list, like, unless the rental income shows up on your adjusted gross income as your taxes, you don't include that. Question? Paul? Yes. It is true, Paul, and I can give you more detailed information. Paul's question was about grandparents taking out 529 plans, and that's true. That's not included, but I can give you more information about that offline, too. That's a good question. Yes, Hannah? Okay, yes. Well, let me give you my email address right now in case some people have to leave. I saw a couple people. And by the way, I don't take offense, so don't wait till my back's turned. Like, if you need to leave, you gotta go, okay? It happens all the time. Like, I'm like going up to get some water, and then people are like, ooh, let me sneak out. It's totally fine. I get it. I don't take offense at all. You gotta leave, you gotta leave. My email address, it is Kevin, M for Michael, Fudge, F-U-D-G-E, at gmail.com. Again, Kevin, M, Fudge, at gmail.com. All one word, Terry. And the M's for Michael, so when I went to Ireland, they were like, oh, McFudge. I was like, I know, Kevin Michael, nice Irish name, right? I went in high school. It was awesome. Met a girl named Siobhan. We're not married, though, but it was close. Yes. Joey, what's up? Yes, Joey's question, the property outside the U.S., if you own it, then it's listed. The key is you don't report any sort of debt that you have on assets, okay? Or any sort of debt. Now, the lovely CSS profile, and I say that tongue-in-cheek, in jest, because I'm not a fan of this, as you can probably guess. But if you're applying to certain private schools, it is required, okay? CSSprofile.org, and the students log in. If they did the SAT, the CSS is through the College Board, so it's the same login information that they use for the SAT. Now, there is a cost associated with this. It's $25 for the first college that you send the information to, and then $16 for each college you apply to after, which brings us back to the point I made earlier about not applying to a bunch of schools, because if you apply to a bunch of private schools, you can see how quickly it can get expensive. This is also available October 1st. The key thing to remember about the profile is, again, it's mostly going to be private schools that require this, and they're going to look at everything under the sun. So even if you have money hidden in your flower jar or under the mattress, they will find it. If you have money hidden in the Cayman Islands, they will find it. They ask you, if you own your home, what year did you buy your home? What was the purchase price? How much is your monthly mortgage? What's left on your mortgage? And most importantly, what is the current market value of your home? Now, it is kind of a fun exercise sometimes to try to lowball it and then say, hey, I found this crazy website that say I'm actually underwater. My home is only worth like negative $3,000. In my opinion, and my advice to you, is to be as transparent and as forthright as possible when completing these applications. You will not have any sort of leg to stand on if you're having a conversation with the financial aid office after you receive your award to negotiate or to say that we find this a little bit insufficient. Can we reassess this? Or this other school looked at the same exact information you had and gave us $10,000 more. You will have no leg to stand on to make that argument if you are somewhat duplicitous, with a small d, in completing these applications. Do the best you can. You may make a mistake. It's okay. If it's an honest mistake, think of this is like learning another language. Financial aid is like a language unto itself, right? When I first understood this, I was like, wow, I found the Rosetta Stone. I mean, at first, it was like looking at hieroglyphics in ancient Egypt. I'm like, FAFSA, CSS, like SAR, all these acronyms, folks in financial aid take it for granted because they swim in it. They've lived it for like 20 years, so it's common knowledge to them. Or a lot of times they'll say, well, look, we put all this information on our website. It's readily accessible. People can just read it. But what they don't understand is this might be the first time you have a student in your household going to college. This is all new. And yes, these concepts and money is a concept we can all wrap our head around, but how this process works, it can be confusing. So your job is to become conversant in the language of financial aid, hopefully eventually become fluent, so when you're having these dialogues, these conversations with schools, you're on equal footing and you're not just accepting what they tell you as law, because you in your head understand these terms and conditions and you're able to have these conversations on equal footing. Okay? The last point I'll make is that third to the last bullet, non-custodial parents. So in cases of divorce for the profile, the non-custodial parent is required to submit his or her information. And it is a separate application that is generated if you say, once you say that the biological parents are divorced, it will automatically generate the non-custodial profile, and then that non-custodial parent will then fill it out on his or her time, without any sort of involvement of the student and custodial parent. Question?
So if you're applying to private schools that are going to require the CSS profile,
Yes.
should you bother putting the parent ability from the Fafsa as a doing CSS anyway?
No, because you're not, unless you're applying to all private schools, because, you are? Oh, okay, no joke. Yeah, if you're applying to all private schools and every school you're applying to is getting the FAFSA and the profile, then it doesn't matter who is on the FAFSA. Yes? What? Yes, I know. Yes. Yeah, no, I get that. We're working on it very slowly, but this is an antiquated process. But we're getting there. Yes, question right here.
Yeah, my name is Ken.
Ken, pleasure.
So when they ask for all this asset information, how do you value the house? What date do you take for your fund balances and stuff like that?
So Ken's question is, when they're asking you all this income information, how do you date things? So dating, if you bought your house, that's pretty straightforward, right? But when you come for dating your checking account, all right, so I'm being videotaped, so I'm gonna be careful with the words that I choose. Let's just create a scenario where maybe you're remodeling something in your kitchen, and on Monday you have $30,000 in your account, but on Thursday the contractor's like, hey, I'd really like $15,000 to cover the granite and the other things that are going in your kitchen. So if you complete your financial aid application on Monday, you'd put that you had $30,000 in the bank. But if you waited until Thursday, you'd have $15,000 in the bank. Or maybe you'd have zero because, somebody in your household said, you know what, instead of granite, I actually want marble. And then, there goes the other $15,000. So I would just say use your discretion on how you answer that question. Actually, the question about how much money you have in the bank on a particular day, I don't know that that's an entirely fair question, but it is what it is. On the profile, there's a room to say, there's a section called Supplemental Questions, and then there's an opportunity for you to freehand to write if you have special circumstances. Typically, that's used for an instance where the information wouldn't be captured in the application. I'll give you a quick example. There are times when you may have money in your accounts, but it's set aside for a specific purpose. Particularly, let's say, long-term health care. So it's not, there's a case where, I remember this kid got into Yale, and the financial aid package was very small because the family had significant resources in an account. But I helped the parents write an appeal letter to say that one parent would require long-term care that was not covered by insurance and therefore was in this account. And after the college reviewed that, then they gave him, $40,000 more. So if you do have circumstances in which on paper it looks like you're killing it, but in reality there are other things going on, maybe you're sending money to relatives overseas, a lot of times that can be the case, you have the opportunity to explain that to private colleges. Public colleges and other colleges that don't require the profile, that's not necessary because, again, the Fafsa isn't seeking that level of detail. But you have the ability to sort of be flexible in how you explain that, your assets. Yes, question? Matt.
Just brought up for us, we recently refinanced it, money earmarked for home improvement through the refinance process. So,
Matt's question is about having additional resources, specifically earmarked for a home improvement project. And so if you're applying to a private school, again, you can put that on in the supplemental questions in special circumstances, and just you type it in, kind of like you don't want to make it a long sob story, but you just say that these resources that are listed in this account are actually for this purpose that has not been yet executed. So, in other words, what you're trying to demonstrate to the colleges, without necessarily saying that, is you're saying, look, we realize that the onus of paying for school is on us, okay? But this is how much we're willing to pay, right? Like, because on the profile, it actually asks you a question, how much do you think you can contribute to 1 year of your son or daughter's education? And that's where you say, you give them a reasonable number. You're not going to say 0, because they'll just laugh at you, right? So you want to be able to say something, but whatever works in your favor given your situation. Okay? Excellent, Matt. Yes? Keith.
You talk about private versus state schools. What if it's an out-of-state school? Is that still considered just a straight state school and you don't know Fafsa?
Correct. It's Keith's question is, do out-of-state schools, are they considered state schools? Yes. Now, some out-of-state schools, like UMaine, I saw a billboard on 93 the other day. I live close to Boston, so driving back and forth, and they said, come to UMaine for what it costs to go to UMass. So some out-of-state schools are trying to entice students from Massachusetts to matriculate there by offering them in-state tuition. There's also the New England Regional Student Tuition Break, which allows students to pay an in-state rate at an out-of-state school if the major isn't offered in the state. So one example is that I know from years ago was aquaculture that's offered in Maine that wasn't necessarily offered at Massachusetts schools. So great questions. I'm going to save a bunch till the end because I do want to get through. I want to be respectful of people's time. After you do both financial aid applications, you have a student aid report. So basically think of it like this. You submit the information, it goes electronically to all the schools, they download it, and then wait to process until they actually have an admissions application on file. And that's where admissions and financial aid sort of talk to each other. You can contact the school with special circumstances directly. I recommend speaking to a financial aid administrator, an actual staff member. In some of the work study that we mentioned earlier, some work study students do work in financial aid offices, so when you call, you may end up getting a student. Now that student may be perfectly capable of answering your questions, but for my money, I would rather talk to an administrator, somebody who's actually working on it, and if you have to make an appointment for a later date, definitely do that. Verification. This is completely random. So remember, if you go to the airport and you're trying to make a flight and then your bag gets randomly, you're like, really? Like, it happens to me all the time. When I'm in a hurry. So I'm like, you know what? I'm going to get to the airport 2 hours in advance, and of course, I don't get selected. Really? But whatever. Verification is just like that. So if your financial aid application gets selected for verification, you didn't do anything wrong. Don't be alarmed. It's not a red flag. All it is a request for the documentation to verify the numbers that are in your financial aid application. One, because the schools that give out federal aid are audited, so they like to make sure when they get audited that they can demonstrate, here's how we constructed our packages, and we did this all in the up and up. And private colleges have their own institutional methodology and their own accounting standards, and so they do the same thing as part of their verification process. So learning, like I said, learning about financial aid, the language, it's important. If you have questions, you can talk to the financial aid offices. So there is the second bullet on the first box, I don't want to spend too much time on because It's a long and detailed answer, like how private scholarships impact aid, because it is well known, unfortunately, that when you bring a private scholarship to the table, then a college will be like, oh, well, you have more money? Well, let's take back some of that grant money that we gave you. There are ways in which to obtain a private scholarship and not have it adversely impact your aid package. And again, since I'm being videotaped, just email me and I'll let you know how that works. But it is an issue that we in the higher education financing kind of space understand and are working to resolve. And also scholarship providers too are very vocal about this, because when they give a student a scholarship, it's to the student. It's not to give it to the school, so that the school can have an excuse not to give the student money and grant that they already allocated to them, okay? And then again, asking about special circumstances, changing in family circumstances, and then how to contacting the financial aid office. I'm a people person. I like to meet folks in public. So if you have the opportunity, if it's a local college, to meet with financial aid and set up an appointment, I strongly recommend it. Particularly if you're not a non-matriculating student and you haven't even enrolled yet, they'll be super nice. They'll be like, oh, do you want some coffee? Sit in these plush chairs? How about some cookies? They actually, it sounds funny, but they actually want you more than you want them. So, play that up to your advantage. So how financial aid decisions are made, think about it like this. So earlier, before I talked about the expected family contribution, what happens when you complete your Fafsa. So the cost of attendance is the tuition and fees plus room and board. Think of those as your fixed cost, okay? They are your costs no matter what. The variable costs are like transportation, books and supplies, okay? And then personal expenses, we could call that our party fund, right? But those are variable costs. So the cost of attendance is everything that it costs to go to college for 1 year. So when we say COA, that's total expenses, both fixed and variable costs for 1 year. What your EFC is what the federal government determines your family can pay based off of the information you put in the FAFSA. Okay, so it's not what you think you can pay, it's what the federal government thinks you can pay. You can actually, if you look at that last bullet, you can use calculators at mifa.org to sort of get a rough idea of what your EFC will be even before you fill out the FAFSA. Okay, so you can get a ballpark for what that is. Yeah, Paul.
When you go to the college website and you look at the financial calculator, do they include all of that, or do they just include the calculator?
No, that's a great question. So Paul's question is, when you go to this college's website, do they include everything that's part of the cost of attendance? Yes, because when you do a net price calculator on a college's website, they're gonna give you estimates for those variable costs. So they'll say an average student spends $1,200 on books, an average student spends $500 on transportation, and then $800 on personal expenses. Obviously that varies according to the student, but they give you placeholders in order to use in the calculations. Excellent question, thank you. Joanne, with an E or without an E? With an E and a capital A, all right, excellent. Wow, Joanne, gold star for your question. Did you know I tried out for Jeopardy? Is that why you're testing me? Because you're testing my knowledge? Okay, so Joanne's question is, because of the, not the fiscal cliff, but the demographic cliff of students right now that are not expected to be enrolling in college because of population declines in certain demographic groups, does that mean, am I getting your question right, that there will be limited aid? Correct. Yes. So, yeah, that's a good question. So no, it's okay. It's okay, because we're getting into a little bit into the business of higher ed and how colleges allocate and colleges have significant endowments and what portion of those endowments are they using the federal aid. Some colleges saying we're eliminating loans from our packages to use that as a competitive advantage against their peer institutions. On the whole, so think of it like this. 70% of kids go to public colleges nationwide, right? We are in this sort of bubble here. So we're the only state in the entire country where more kids go to private schools than public schools. And also we have the highest concentration of colleges anywhere in the world, right? So all that being said, I am not entirely sure. I would have to do more research on that and ask my friends who are in college kind of what they're seeing and what the expectations are. I can tell you that their budgets are strained, and they recognize that they need to do more. And a lot of the colleges that are in the middle that maybe not have like the $30 billion endowment, but then they're not like getting together on spit bubble gum, are trying to figure out that calculus, right? Like how much of a discount do we give? Because people are starting to question the value proposition of college, right? And I've been making the argument for years. In some instances, the risk is outweighing the reward. And if you really want to go deep into calculus like AB, right, or differential equations, many employers are actually saying, wait a minute, time out. Is the bachelor's degree a credential, or has it been a sorting mechanism to keep people out of the workplace? And so right now, roughly 3% of companies nationwide do not require a bachelor's degree for certain entry-level positions, because they're like, look, we're all about skills. We're trying to help people build skills. And if they bring other experiences to the table, we're going to train you anyway. So we value that, and we're going to help those people progress through our organization. And colleges are kind of like, wait a minute, but no, these shiny bachelors actually help. And there's a disconnect between how colleges think that they're preparing young people to participate in the workforce, and how the workforce is embracing those students. In fact, my wife works for Deloitte, and they did a survey, and they said it was like, they surveyed their employees, and they asked them, how well do you think college prepared you for the job that you have now? And over 2/3, I think it was 68.3%, said that college did not help them prepare them for the jobs that they have. And yet the colleges will say, well, 82% of our graduates are ready for the workforce, And so there's this huge disconnect. All that is to say, I'm not discouraging you. I think this is a great process. College is wonderful. But again, it has to be the right value proposition for you. The investment that you are making, you want to see a return on that investment in the form of not just economic or employability possibilities for your student, but also a sound economic foundation from which they can build their future. How many millennials have I spoken to in the last 10 years that are like, man, if I'd only known then what I know now, I would have made different choices when I was 18. Because now I'm 27, and I can't afford to live where I want to live, or I'm living at home, or my life choices are somewhat limited based on the decision I made when I was 18. And I'm like, well, let's go on tour, like Kevin and the Millennials, it'll be like a traveling review where you'll talk about your experience. But hindsight's 20/20. I think the main takeaway for you all in this room is to understand that where your son or daughter goes to college is not a reflection on you. Okay, it is a market condition. So many parents I talk to have made this deal. They say, well, if little Johnny or Susie does all they can in high school and really, what's the word that they use? Applies themselves and gets awesome grades and gets into their dream school, then I'll make it happen. And sometimes you can't do that. And don't paint yourself into a corner. And how many parents have I talked to that says, well, I don't have a choice. I don't have a choice. I have to make this work. How do I make it work? And then they'll jump through all these hoops to make it work for that first year. And that's great. And the student will go, and they'll be on campus, and they'll feel part of it, and kumbaya, and everything's awesome. But what happens the second year when you still have a $30,000 or $40,000 gap to fill, right? What happens the third year? And then, oh, by the way, what happens when you have siblings? What about them? Okay? So you really have to think about, you got to play the long game, and you got to think about this holistically, because it is so imperative. I can say this now because I have kids. Before I had kids, I'd be like, this is the most irrational. I'm a kind of a logical person, as you can probably tell, right? And I'd be like, why do people make irrational choices? But then you look at your kids, and I was there at the birth and like held them, and they're awesome. I love my boys, even though, sometimes I joke and wish they were girls, but I love my kids. And the proverbial mom lifting the kid off, the car off the kid who's strapped onto the car. Like, you would do anything for them. You would move mountains. But like, as you think about keeping your kids safe, physically safe, right? Because that's my number one rule. You go to my house, you ask my kids, what's dad's number one rule? They're like, safety. They hate it, but like, I want to keep my kids safe, right? We all do. But like, expand that out to say, how do I keep them financially safe? How do I protect their financial futures, right? Because that can change the mentality about this process so that you are working in concert to help them, again, help them soar and not like college be like a lead balloon that holds them back. Okay, seriously, like you're in the catbird seat because no decisions have been made yet, right? You haven't signed anything on the dotted line and you're just trying to acquire as much information as possible. Take advantage of that because education debt is not like consumer debt. If your kid gets a credit card and gets into trouble, well, theoretically, you can restructure that through bankruptcy. Education debt is not the same. It's not the same, okay? So this is something to be taken really seriously. So getting back to this, the cost of attendance minus your expected family contribution, that's what your demonstrated need is. So when a school, again, they say we meet 100% of your need, they're saying we're meeting 100% of your demonstrated need as evidenced by what the cost of attendance of our institution is, less your EFC, okay? So the way that they do that is they don't automatically give you the financial aid award in free money. So for example, to me, if somebody says, I'm gonna meet 100% of your need, that means that if the school costs, in this case, $45,000, and my EFC is 5, so my need is 40, to me, meeting 100% of my need is you're giving me a $40,000 scholarship. That meets 100% of my need because I don't have to pay anything out of pocket. I'm already paying $5,000 because that's my EFC. That's what the government determined that I can pay. Okay? So you're meeting my need, you're giving me 40 large, right? Great, thanks. But no, filling your need means constructing your award letter of many different things, right? So work study, student loans, and grants and scholarships. Now I want you to pay attention to the top because that college that says we meet 100% of your need, they may not, their 100% might be like 90% because they might gap you by like $5,000. And actually your entire gap, if you want to be upfront about it, is $10,000 because the combination of your EFC minus your unmet need, there's a $10,000 gap between the cost of attendance and their financial aid, which altogether equals $35,000. Now, this is a great package because there is a $17,500 grant and a $10,000 scholarship, right? So that's awesome. $27,500 in free money? Heck yeah, I'll take that to the bank. That's great. But you got to remember, the school costs $45,000. So you still have 18 and change or 17 and change left over. So the way I look at that is I'm like, okay, the college costs $45,000. My responsibility is 17. Why do I say my responsibility is 17? Well, because I have to have $5,000 out of pocket as my EFC, and then $5,000 is unmet need. So that's $10,000 right there. And then I have $5,500 of the student loan. Now, again, that's not my responsibility because it's in the student's name, but again, I think of it as my responsibility because I'm trying to help my kid pay for school, right? And then the $2,000 in work study, the student will earn back, but I have to bring it out of pocket when that bill is due July 1st or August 1st. So the net price calculator, we talked about it before, it is available on each individual college's website. And it's a tool that is useful. I think part of the challenge with net price calculators, though, is it doesn't give you it doesn't include a percentage likelihood that you will win the award. So if the net price calculator, if you see, so I helped the family a few years ago do this for Occidental College in LA, okay? Occidental is like 74 and change, and that person's expected family contribution, the expected discount or the financial aid award was like $47,800. And in that $47,800, which sounds like a lot, but when you think the school costs $74, I mean, okay, yeah, that's great. In that package, it was included like a $30,000 scholarship. But what they don't tell you is, well, how many of those $30,000 scholarships are awarded to members of the incoming class. So they could have one $30,000 scholarship, and that could be in your net price calculator, assumed financial aid award. But if the applicant pool has 5,000 students, what is the likelihood that your student is actually be the one to get that money? So that, I think, is, I would do the net price calculator, but I would also follow up with the college or university. Because I would say, how likely, you say that this is what we could theoretically get based on the information we put in, but what is the number of scholarships that is offered that is included in this award? Yes? Correct. That doesn't mean you're going to get it the next year, because they have many disclaimers on the net price calculator that says, if you assume that this is what you're going to get and you sue us, well, we'll countersue, and it's just, there's all this legalese associated with it. So it can be a good exercise, again, because it helps you get a ballpark and figure out what might work for you. But again, they'll be like, don't hold us to it. Sure. So if your Linda's question is, if your EFC is $45,000 and the cost of attendance is $45,000, then you have no demonstrated need. So the only time you wouldn't get any need-based aid, you could get a student loan, and then you could get any. No, you could get a federal student loan no matter what. Yeah. And then you can also be able to get not just federal student loan, but train of thought. No, merit-based aid. If the school is private, they can give you merit-based aid. All right. So after the question is, when do you find out what your EFC is? And that is when your student aid report is sent to you. It usually takes about 2 or 3 days for the Fafsa to process, and then a little bit longer for the profile. Okay? Yes, in the back.
Do you submit the CSS profile every year?
Yes, you do the CSS. You have both the CSS profile and the Fafsa. It's called a renewal, but you fill out the application every year. Correct. Tricia.
If they offer you a loan in the financial aid package and you do not accept it, in future years, does that loan impact your financial aid package?
Trisha's question is, if they offer you a loan and you don't take it, does that impact you in future years? No. Each year is treated as its own separate entity. So, good question. Thank you. So, the reason why I pointed out that you don't want to look at unmet need as the criteria for determining what is a favorable financial aid award is because if you look at college A, the unmet need is 0. So somebody looking at this and comparing college A, college B, and college C might be like, you know what? College A is the best because it has 0 unmet need, and then college C and college B have 7,000 and 15,000 respectively of unmet need. I would argue that it's better to look at the first line to determine what is the best financial aid award. So college A is best not because it's 0 unmet need, but because it gives you $32,500 in free money and grants of scholarships. Because if you look at this scenario, the unmet need is equal across the board. And this is where, again, colleges might not be deceptive on purpose, but it can be a bit confusing. Because you're trying to determine, how do I know which award is the best? But again, in this scenario, college A is the best because it gives you the best amount, the most amount of grants and scholarships. College C would be the worst because it gives you a $29,500 parent loan. And just real briefly, there's a flaw in the system that you can have an EFC of 0, meaning the government determined you have no ability to pay for school, and you can be on public assistance, and you can still get a $30,000 or $40,000 parent loan. Because the parent loan allows you to borrow up to the cost of attendance, less whatever financial aid you received. And I've pointed this out to several colleges, pointing out how illogical it is that somebody has an EFC of 0, and how in the world could they then pay back a $40,000 loan for 1 year? And if you multiply that by 4, it would be $160,000. Like, how does that make sense? And the colleges will just say, well, it's up to the family to decide whether or not they want to do that. And to me, again, that's a cop-out. Like, that's a loophole we have to close. We've been trying to close, but to no avail. So, again, Best award, College A, not because it has the least amount of unmet need, because you have the most in grants and scholarships. The way that I try to tell people too is this list. If you find in the spring, you're looking at $20,000 left over after you receive your financial aid award, your immediate thought should not be, okay, I need to borrow $20,000. Your first thought should be, how do I cut this $20,000 in half? And that's a combination of past income, present income, and future income. Past income is savings, okay? Let's say your son or daughter had $4,000 in the bank, so you're not gonna blow all that $4,000 the first year, you're gonna split that up over 4 years. So you take $1,000 from that savings account. Then you may have saved 20,000, you may have saved 16, whatever. You take a portion of your savings and you apply it. So now you're down, you take $1,000 from the student, you take $4,000 from you, now you're down to $15,000 of balance left over. So then you talk about present income. Remember earlier I talked about how you can do a payment plan for a predetermined amount. So let's say you take $5,000 of what's left over of that 20, and you say, you know what, I'm gonna pay $500 a month for 10 months. It's called a tuition management plan. There's no interest associated with that. There's sometimes an enrollment fee of like $50, but once you do that, you pay $500 a month, then that's your present income that you're using to satisfy that outstanding balance. And, oh, by the way, you can get your student to contribute to that. So maybe they pay $150, you pay $300. Maybe they pay $200 a month, you pay $300. Whatever amount you want. Maybe they pay nothing. But you can use your present income to reduce the amount that you theoretically will borrow. And when we get to future income, now there's $5,000 from savings, $5,000 from present income. Now when you go to borrow, you're going to borrow $10,000, right? And you could do that through a parent loan, you could do that through a private loan, you could do that through a home equity line of credit. Again, I don't necessarily recommend that, but if interest rates, if you're able to do 1.9%, sometimes that can be favorable. It all depends, okay? But now, instead of borrowing $20,000, which if the gap remained the same over 4 years, your cumulative amount of debt would be $80. Now you're only borrowing $10,000 a year, which cumulatively is $40, right? So again, as the school counselor mentioned in the beginning, these are really important conversations to have now. Please do not wait until you get your financial aid letters in April to talk about cost of college with your student. Talk about it now, because it can impact where they apply to school. It can also impact, again, where they may be like, you know what, I saw a student one time, believe it or not, it was like a parallel universe. Because the student got into Syracuse and the financial aid package was insufficient, and the student told the parent, you know what, I don't want you guys to have to do this, so I'm gonna go someplace else. But the parent, I guess, was offended by that thought, because he was like, what do you mean? You can't tell me how much I should pay? I was like, what is happening? Do you realize what your son is telling you? And again, they were divorced, and the guy, I guess he had a chemical imbalance or something, for the father. But I was like, dude, what are you doing? You have like your kid who's making a sound choice and like looking out for your best interest. Be the grown-up, whatever. But would starting at a 2-year school save money? So I can tell you, full disclosure, I attended the University of Virginia, founded by the third president. Who was the third president? Third president of the United States. Jefferson, yes. Who's the first and second? Washington, Adams, Jefferson. And then I went to Harvard for graduate school. At Harvard, I had classmates who started at community college. Why? Because they went to college west of the Mississippi. They weren't in this bubble in New England that's like, ooh, brand names are the best. And they started out at community college in LA, in Glendale, then transferred to UC Davis, UC Irvine, and Cal State Fullerton. And then ended up at Harvard, and one of them actually she did her PhD at Columbia. Well, slow down, okay? The brain power tier is tremendous, but slow down. But she had very little debt because she started out at a 2-year school and then completed her undergrad at a state school, right? I talked to a gentleman, I was getting pool supplies a couple years ago, and I was in Acton, and there's this guy, he looked like he was older. I was like, hey, you a senior, did you graduate? He's like, yeah, how'd you know? I was like, lucky guess. I talk to kids a lot, I'm kind of a kid whisperer. And I was like, what are your plans for next year? And he's like, you know what, I'm gonna go to Middlesex. And I was like, whoa, buddy. You go to Acton Boxborough Regional High School, okay, one of the famous hyphenated schools in Massachusetts, Concord Carlisle, Lincoln Sudbury, Whitman Hanson, like Bridgewater Raynham. You're what? 99% of your classmates go on to a 4-year school every year. I read the profile. of your school. And he's like, well, that may be true, but this 1%, I'm gonna go to Middlesex, get my associates, transfer to UMass Lowell, and get my bachelor's in engineering. And then when I finish and I get my degree from UMass Lowell, in the 4 years it took me to go to college, I will have a quarter of the debt that my sister had after going 1 year to her private school. And she finished, but she was living at home because she couldn't afford to live on her own. And he was like, I don't want to do that. Like, I want to have more choices. I want to, and I was like, well, did people make fun of you? Like, how did you, like, was there peer pressure? He's like, no. And if they did, I wouldn't really care. Because, like, I'm singularly focused. I'm like, that is a dude I want building my bridges, okay? He's probably graduated now, civil engineering. If they decide to be able to do Zakin Bridge going to Boston, like, I'm sure he'll be on the team. Like, just kid who had it all together. And I say that because I'm not gonna lie. Like, I live in Arlington, and I did this presentation like 6 years ago, and there was a guy, it was a packed room, the guy got up and he was like, well, Kevin, you have to admit that there is a stigma associated with attending a community college. I was like, what? He's like, there is a stigma, and so that's why we don't want our kids to go to a 2-year school. And employers looked down at it and dotted it. I was like, buddy, if you want to believe that, I'm not gonna tell you that you're wrong, okay? Based on where we live. But if you're making choices based off of what people think about the bumper sticker on the back of your car, I don't know that I can't support that. I'm not gonna lie and say people in their cocktail conversations, look, where are your kids gonna go to school? And like, there's a sense of pride you have as a parent to say that my kid got into Harvard, like, oh, I must have done a really good job. But again, where your son or daughter go, this is not your capstone project as a parent. You're not getting your PhD in parenting based off of where your kid goes to school. And really, who cares? Nobody cares. Like, when you introduce yourself at parties, do you say, I don't say, hi, I'm Kevin, I went to Virginia and Harvard. I'm like, no, hi, I'm Kevin. I work in the intersection of K-12 higher education and workforce development. I love the Philadelphia Eagles, Super Bowl champions this year, by the way. Yeah, don't be jealous, okay? I'm sorry that we almost ended Tom Brady's career, but he had a resurrection in Tampa Bay. But it doesn't carry the weight, and it doesn't, again, there's no evidence that says that if you go to a brand name school, your outcomes are better than people who go to different schools. And if anything, it's more based on your demographics. Like, if you started out wealthy and you ended up wealthy, where you went to school has no bearing. And if you look at the demographics of people at Ivy League schools, they're not actually representative of everybody in the entire country. So anyway, that's just that. So that's my plug for looking at 2-year schools. You had a question or a point? The question is, am I having this conversation with students? I would say that over the years, I think there has been a penetration in the consciousness of students in this area. I travel for work, so I can tell you everywhere around the country, it's accepted. Like, if you get into your state college in Indiana, Ohio, Nebraska, like, that's a good thing. It's not like, ooh, I feel sorry for you because you got into UMass. Like, what did you do? Like, your life sentence is like, hard labor, cracking rocks, and making license plates in Amherst. Like, this is a uniquely New England phenomenon, unfortunately. Like I said, 70% of people go to public colleges nationwide. And when you go around the country and you tell them this, they're like, why do parents put themselves through that? Why don't kids look at 2-year to 4-year as a viable option? We're trying in the Commonwealth of Massachusetts to make it easier. And I know that they announced, City of Boston residents, Boston Public School students could go to Bunker Hill at no cost. It's a tough sell. But hopefully in my lifetime we'll get there. I'll be 48 in a month, but that's my goal. Question in the back. No. Sorry. I mean, I got to give it to you straight. I wish I could say yes, and like, colleges are super altruistic and like want to help young people realize their potential, but they are bottom line businesses. Their goal is to get people in seats and, to make their class each year. Like, if colleges were more serious about helping students actually get through, and have better retention rates and then get through and also have a seamless transition to the labor market, then I would be a little bit more optimistic. But many colleges are operating this antiquated model. Like, And that's why I say, again, really think about how expanding your definition of post-secondary education. Thank you. So again, calculate the total terms of 4 years of debt. Considering too, if your student has expressed interest in going to graduate school, it makes absolutely no sense to then blow your budget on an undergraduate degree if you're going to go to graduate school anyway, right? And then comparing starting salaries too. Like I've talked to many students who are like, I'm not sure what I want to do. Take a year off. Go work. Go get a job. Have some clarity, and come back to it when you're more serious. Seriously, I mean, I wish I would have taken a year off. It would save me a lot of heartache. I mean, I eventually recovered, made Dean's List, but it was tough. Well, I do have an excuse. Did anybody ever see the movie Pitch Perfect? Okay, so my group actually was one of the inspirations for the movie. So if you read the book, I'm actually in the book. So if you read the book, Kevin Fudge is in the book. Yes, it's true, Hannah, I'm not lying. My a cappella group at the University of Virginia was one of the three. It was the Yale Whiff and Poofs, Tufts Beelzebubs, and the University of Virginia Hullaboos. And when the Bard and Bellas actually went on stage at Carnegie Hall at the finals, the group that was singing the final countdown in those funny robes, that was the group I was in college. So I had a blast first year because I made the group and had way too much fun, and actually I got a letter from the dean. It's like, if you get one more grade less than a C-, you will be on academic probation. My dad saw that. He was like, dude, you're not going down there to sing. I'm like, but Dad, it's so awesome. He's like, son, you get your grades up or you're coming home. I was like, okay. So then I made Dean's List after that, and it was all good. But point is, what was the point of that story? I don't know. Other than go see the movie again. Pitch Perfect 2 and 3 weren't that good, but it was college acapella is a blast. But yeah. So lastly, to wrap up, mass transfer, I mentioned this before. There's benefits to doing that. If you go to mass.edu, mass transfer, it details all the benefits that you can get from starting at a 2-year school and then transferring to a 4-year public college. The tuition break I mentioned earlier, so a reduction on out-of-state tuition costs for New England for certain programs and majors at those colleges. And that website is, it's on your packet. It's NEBI, the New England Board of Higher Education, nebi.org/tuition break. Free resources. So FAFSA Day is, if you go to fafsaday.org, there's a list of places where you can go throughout the Commonwealth to fill out your financial aid for free. They have financial aid administrators from colleges that are there to help you do your financial aid application, offered both in English and Spanish from October to February. You can register to go to one of the sites at fafsaday.org. And also there are educational opportunity centers if you go to massedco.org. And again, it's in your packet. And they can help you at the educational opportunity centers. They can help you fill out your profile in addition to your FAFSA, as well as give you more information about scholarships and things like that. What you can do now for staying on track through senior year, just making sure that you're, again, curating your college list, not expanding it. If you're a senior in college right now, hopefully you are curating it and not expanding it. And if you're a parent of a junior, the main thing is, obviously, you can encourage them to take standardized tests. Many schools are becoming test optional now. If you go to fairtest.org, you'll see a list of colleges and universities nationwide. And my prediction, hopefully in 20 years, the SAT will go the way of the dinosaur, because the SAT only measures how well you can take that particular test. It does not measure how smart you are or how well you do in college. Okay? So ACT is a little bit better, but again, no offense if anybody works at the College Board in here. Anybody? Okay, good. Because again, it's more your grades, it's more what you do outside of school, how you're a part of your community, and then the summer of between junior and senior year is when you should complete your essay if you are a junior. And then the thing to look out for is the webinars from MIFA on how to interpret your financial aid award letter. We used to do in-person events. I don't think that we'll be doing in-person seminars like this on understanding your financial aid award letter, but they are very good webinars, and you can sign up for those. So what you can do now is get your FSA ID, okay? The FAFSA will be available next week, so get the FSA ID for the student and parent. Okay, you can register for webinars and things at mifa.org/events. You can also do the blog. I'm sure there's a podcast there. Again, I'm a digital dinosaur. Like, I think technology should have stopped at the pager. Like, somebody pages you, look at the number, like, will I call you back? No, I don't think so. And then, but now we have phones. Great. But mifa.org, again, neutral third party, excellent advice. There's lots of videos on there. I have a video on there if you want to look at it. But it's a lot of the things that I talk about tonight. So it's actually kind of funny. They did a really good job of editing because I was getting my kitchen redone, and I'm on my front porch, and I'm trying to do this thing. There's like drills and everything going on, but you can't really hear it in the background. Good times. And then here's all the things on MIFA. If you want to connect to me on LinkedIn, all you got to do is type in Kevin Fudge at Google. The first thing that pops up is my LinkedIn, really. I mean, even though I think there's 6 Kevin Fudges in the world, there's one in Canada, Halifax, he's a real estate agent. There's another one in England. There's actually a Kevin Fudge in jail in Florida. Kind of looks like me, except he's a little more chubby. So, yeah, it was weird. I was like, Kevin Fudge, mugshot, wow, okay. But yeah, I invite you to connect with me all on LinkedIn. Because I'm interested, part of what I'm trying to do is create more opportunities for high school students to have internships, to have real work experiences, to give them an idea of what they think they might want to do in the future, how they might want to apply their skills and talents and abilities, which will then help inform their college choices. So even if your company doesn't offer high school internships, I might have a way with words to help facilitate that process. So definitely connect with me on LinkedIn. Looking forward to that. And that's it. So if you have any other questions, I think we're over time, so I will be up here for a little bit. But thank you for your time. Have a great holiday season, and good luck to you all.